Have you been asked to write off a bad debt in accounting and you're not sure the procedure for that? Well, you've come to the right place because I'm Professor Capko and I'm going to show you how easy it is to do in today's video. But first, I want to say I believe something great is going to happen for you today. And now back to the video. In a prior video, I showed you how to do the adjusting entry to make an allowance for bad debts. If you missed that video, you may want to start there. I've linked it up here in the corner. But in that video, the company had $55,000 worth of credit sales in a particular month, and they anticipated that 1.5% of those credit sales would be bad and uncollectible. So because accounting will match the revenues to the expenses and the expenses to the revenues, we did a allowance for bad debts. There was the $55,000 worth of accounts receivable, and we did an allowance for bad debts for $825, which represents 1.5% of the $55,000. This is a contra asset account. It offsets our accounts receivable, and we expense that at that time. So therefore, as I explained in detail in that video, we expensed the $825 at the same time as we booked the revenue of the $55,000. So our expenses and our revenues matched up. In today's video, that same company will have to write off $500 of the accounts receivable when one of its customers who owed money filed for bankruptcy. So you're now being asked to enter the transaction to write off that $500 worth of accounts receivable. I'm going to show you how to do that. But if you're someone who finds accounting confusing, go ahead and give this video a thumbs up, and that way I'll know that you could use some more videos simplifying accounting, and I appreciate it. Thank you. As I mentioned, we have already accounted for the allowance for bad debts. We don't want to expense that $500 a second time because we've already expensed $825. So we're not going to be expensing the $500. What we're going to do is we're going to debit our allowance for bad debts for the $500 because we've accounted for $825 of it, and we're going to reduce that by $500 because, in other words, we're going to use up $500 of that allowance, and we're debiting it here. So we are at the same time then crediting our accounts receivable for that same $500. In other words, we're reducing the amount that we're expecting to receive by $500. And if there were individual accounts in your accounts receivable, you would actually do the credit to the account for the actual customer that filed for bankruptcy. But in this case, I've got a general accounts receivable, so I'm just going to credit that account. How that will look in the general journal, and again, here was the prior entry where we debited our bad debt expense and credited our allowance for bad debts. Today, we're going to debit our allowance for bad debts for $500, and we're going to credit our accounts receivable for $500. So our 500 debits and credits balance, and so we are done with that transaction. And you now know how to write off a bad debt when it occurs. You might be asking what happens if we haven't allowed enough for bad debts and maybe more file for bankruptcy. or just simply don't pay? Well, I'm going to leave that for a future video. And to catch those future videos, I ask that you subscribe to this channel and hit that notification bell so you never miss a video. Thank you.